Coming up in this show, I'm going to bring you my opening comments on the markets. Harvey has a trade idea for you, and he's going to analyze EWW, that Mexican market. You'll find that really interesting. Katie has trade planning with options, and she's going to analyze gold and give you an option strategy in there. And don't miss our level 1 special. You will not believe what you're going to get for $10. And I'll bring you my analysis in the stock market, and I'm going to do a little quick review of the analysis that I showed on the New Year's special. I think you're going to find it really interesting.
Well, I'm going to the city and I'm going to do a steady show. And I know all my fans want to learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone gliding, I know we're going to get it just right. I'll get inside your mind, we'll have a real good time. We're going to trade today, we got to trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market kept cruising to the upside last week, as I was cruising on the Mediterranean. It was a big difference, though, as our ship was the one encountering huge rocking and big waves, while the stock market stabilizers were working very well. The indexes kept moving upward as techs and semis led the way. But record valuations, you really have to wonder whether investors are following a siren song. Even as interest rates moved to the upside, with the disappointing talk from Powell, that couldn't even break the stock market's upside momentum as the S&P 500 crossed the 5,000 mark here on Friday. I'll show you our analysis coming up in a few minutes, and I'll be going back and reviewing that long-term analysis that I showed for year-end. For now, I have some important things to show you. I'm going to give you 3 slides right now that I think are very worth you paying attention to. And then, of course, my full analysis as we come a little bit later into the show. This is a chart of the 10 high caps percentage of stock market capitalization. You can see in the bottom there are a lot of different sites that have been passing this around in those sources, and I pulled this off of from Lead Lag Report, who pulled that off of Seeking Beta. So this is really moving around, but it is important because I think that when you get to extremes that this is showing, you better pay attention. What this is telling you is that the top 10% stocks of capitalization in the market account for 75% of the whole market capitalization. That is crazy. When you look back at 1930, yeah, that was just before, or 1929, that was just before the Great Depression. You could see what happened in there as the stock market then, of course, had a collapse. And that level of percentage of high caps really continued to dissipate in a downtrend all the way into the 1980s, as you can see. Now, when you take a look at over here, where we had just before the dot-com bust, well, that was around probably 73%, you could see right there. And then, of course, you had the dot-com bust right here. And now look where we are with these huge percentage of tech stocks, AI stocks, that are leading this market to the upside. They account for 75% of the total market capitalization. It is nutty when you look at that, and it just shows you the kind of risk in the market once those stocks begin to correct, and they absolutely will begin to correct. Of course, the question is when. How long can they hold up this way? Well, they're pretty stretched, and I'm going to show you more as we move forward. So that's slide number 1, and definitely something worth paying attention to. This is slide number 2, in that same line, I'm just showing you my charts here, looking at 4 of the mega caps here, NVIDIA, Microsoft, Amazon, and Meta. And the way that I like to measure overbought, oversold conditions on our charts are the distance from the 13-week or the 34-week moving average. These are weekly charts. And you can see on NVIDIA, look how far it moved away. Now, when you look at this area over here where it got really far from the 34-week moving average, it came back and touched it. It did that with a sideways movement that still saw nearly a 100-point decline on the downside in NVIDIA. It is now trading up in this area of 712, and it is 180 points above that 13-week moving average. There is a big correction coming in NVIDIA. You can see the same thing here in Microsoft, where it goes into the corrections, tests those moving averages, and then moves way away from them. Well, a test is coming again of those moving averages, or worse in Microsoft, as it is way extended on the upside. Here's Amazon, pretty much the same picture right over there. It would take a move down of about 20 points just to test that 13-week moving average. And Meta, which I had said would be one of the worst stocks for next year, and clearly at this point, or this year, clearly at this point, I'm very wrong on that one. Well, that still may come, because I think that what we see in as far as ad revenue goes and the cost of AI implementation, I think last quarter was an anomaly where they announced a stock buyback and a dividend and all that and pushed the stock up. I don't have the vote of confidence that they do, and just coming down and correcting and getting back to that 13-week moving average would be a 115-point decline in Meta, and I think we're going to absolutely see that sometime in coming months. So you could see an extreme overbought condition in these high caps that is in line with what I showed you on the previous chart. As the high caps accounting for now 75% of total market capitalization. Just absolutely insane, mind-boggling, and a correction coming there. Let's look at one more thing, because you got to ask, you know, is the economy going to catch up? Is that what's going to support these prices? Well, that's not what this shows here. This is from Bloomberg, Tavi Costa, Crescat Capital, another one that's getting passed around a lot, and important to look at as you look at the S&P 500, which is the white line over here, and the leading economic indicators. And you can see in here historically, when the LEI turns down sharply, you get big declines in the stock market. This was the 2000 to 2002 bear market. Here you had big downturn in the LEI, and then you had this break. It took a little while to get that going, as you can see. Maybe something similar to what we had now. And then, of course, you had the great financial crisis in here and the big break. Here's a big break in the LEI that was related to the pandemic, and we did have a 30-something% drop there very quickly on the pandemic. And here you see the LEI moving down again sharply here, and the stock market moving up to new highs. So there is a massive disparity that you see right over here. And once the economy starts to turn down, you're going to see interest rates and the stock market moving down together. And I think that's going to be fairly soon. As you look at that. So those are 3 important charts to consider. Extreme overbought conditions when you look at the individual stocks. The high cap, mega caps accounting for 75% of the total market cap. Crazy, historically crazy. And the LEI showing you the economy is not going to be supportive to the stock market. All of that puts you on the edge of a cliff, and probably corrective forces will hit very soon. And while these indexes have stretched to the upside, the breadth, it continues to be very poor. As a matter of fact, when you look today, with the stock market moving to the upside again, advanced declines are about even. So I'm going to show you later on in the show the stock market S&P 500 versus the equal weight index, and you'll see that the equal weight index has not done anywhere near as well. And that analysis overall, and what I just showed you, says that a correction is imminent. And with these extremes that we're seeing in these leaders, it could be very sharp to the downside. I'd say scary sharp. And with the percentages that I see of potential upside versus a downside correction, I'm going to make the risk rewards 1% to 10%. That's 1% potential upside and 10% potential downside in coming months. More of that as we look forward here in this show. For the week, the stock market, well, gains about 1%, a little bit more. The Dow Jones Industrial Average is barely to the upside, so that one's a little bit weaker. Bond market, well, that loses on the 30s, 2.25 points. 10-year yields up 14 basis points, and that's pretty much on the correction that has been going on based on the comments out of Powell. And they've taken a lot of rate cuts out of the forecasts. We're the first one probably now forecasted in June. And I'm only looking for 2 or 3 rate cuts this year. So that's what I have thought. The gold market loses about $18 as the small gains came in the dollar, and the silver market down about 18 cents. And we do think that the gold market has a much better upside than downside potential. Dollar, I think it's going to chop around for a few more weeks and then move big to the downside. And it really should have done better this last week on the interest rates moving back to the upside. And that upside move in interest rates was pretty much in line with our projections, where we thought it could get up to about 4.25 to 4.4% on the 10 years, and that still might happen yet. The oil market, that's up over $4, and that's after a huge decline the previous week. The question is, will it trade 79 first before it moves down sharply again? Because we see it moving down sharply again pretty soon. But there's a shot at 79 one more time before it does start to move to the downside. That's my opening comments on the market. Please do go to askSlim.com. Take that new level 1 deal that I'm going to show you coming up. $10 not recurring. You won't believe what you get. On YouTube, subscribe to our channel, click the notification bell, and like the video, give it a thumbs up. And on X, follow us at askSlim. Any questions you have on anything I'm showing you here or on our memberships, education, analysis, write to Matt at askSlim.com. This is a trade ideas sample from Arvi. He's going to share analysis in the Mexico market, and he's positive. You're going to see this coming up.
This is an askSlim trade idea video walkthrough for an intermediate term long in the iShares MSCI Mexico ETF. We have been very bullish on this country ETF for some time now. I've been highlighting this on both social media as well as to our members on Discord. Keep in mind our Discord service is available to our membership. If you want to get access to our trade ideas feed, you have to sign up for a level 3 membership or higher at askSlim.com. So let's go ahead now and highlight this long side trade idea for EWW. So this is the weekly and daily cycle analysis. Let's go ahead and pull up the weekly. Now you can see first a very clear low that formed here right in the later part of the fall. We turned up right off of our weekly cycle timing window and then ran higher. After that, we formed a clean flag. We had a minor low that was due again right around mid-January, formed right on time, and then turned up in that next minor rising phase. So now we have 2 cycles pushing on the upside. We are still positive here on the iShares MSCI Mexico ETF. We're looking for a move into this zone from right around 71.64 to 73.80 or so. If we shift over to the daily chart, you'll see a bullish picture here. We formed our low right there. We turned up. We now have a bullish slim ribbon and a bullish PO. Keep in mind that the PO, which is available for level 4 members and up at askSlim, gives us these follow-through signals either to the upside or to the downside. We had beautiful signals right here in the PO. You can see how it moved into the oversold and then got out of oversold. That triggered a bullish signal, and we saw follow-through right here. We moved into the oversold and turned up. That triggered the follow-through signal. So just giving us really nice signals here on the upside as well as on the downside that you can see back here and back here, each of which did move down nicely. So right now we are getting into that oversold region in the PO. We're watching for it to get back out of oversold. That would trigger a bullish signal, and we watch for some follow through back up. We're watching for a dip just a little bit lower here into $67 to right on 65.48. A move through the 78.6 at 64.39 would render this idea no longer valid, and we are looking for first to move through this zone high at 69.72 and then into this zone here from 71.68 up to 73.66. Okay, so this is the outline for our idea. We're watching for a flag to form, for a low to form right around the middle part of February off of this minor low and then turn back up to the upside like that here in the iShares MSCI Mexico ETF. As always, if you have any questions or comments, feel free to send us an email. Thanks again and have a great day.
Great job on that, Arvi. I want to look at something that's also supportive to the work that Arvi just did as we take a look at our momentum tracker. Now, momentum tracker is included in our level 1 special that we're offering right now. It's a great way to confirm the more powerful biases which come from the longer term analysis. This the outlook here, as you can see, is 3 months plus. Looking out. So this gives you the long-term, intermediate, and short-term conditions that you can see in here, and our directional bias overall, which is the summation of our algorithms that are built in there. We just did analysis on EWW, so we're going to take a look at EWW. I'm just going to type that in here. It's going to bring it to the top, and you could see that, like Arvi said, this is bullish. It was in a correction and likely to resume to the upside. Our algorithms are saying conditions suggest intermediate correction is likely ending and dominant longer-term trend is likely to resume. So this is very much in line with what Arvi just showed you in that analysis. I like to confirm it looking at this. Let's take a look at the chart in here as we look at the longer term chart and whether or not this has done a good job in keeping you in. And you could see in here where the M is the mixed conditions that you can see in here, and right over here is where it began to turn positive. This is back at the end of the year, and it's given you these different positive readings that you see right in here. So for the longer term, it's been slightly positive. The positive there is very lightly colored, as you can see, and that's where we're getting this slightly bullish reading right there, which is very much in line with what Arvi brought you. You can see in here that this is just great information as we're looking at these different world ETFs that are in here. And of the world ETFs, you can see for directional bias ratio, 77% of the world is in bullish condition versus 8% in negative. Let's just scroll on this bias here, and you can see, let's get rid of this so that we can see all of these. And you can see in here the most bearish, of course, is the FXI. That's China, which we're looking for a short-term bottom in there. But did the chart keep you negative? Absolutely. All of this time period in here as China has fallen, our algorithms have looked at this as negative, as you can see. And of course, IWM is often in line with that. But that's the most bearish is China. And you can see in here the stock market here in the U.S. Very bullish. And FEZ, which is the big 50 big stocks in Europe, very bullish. Of course, the QQQ, SPY, all of that showing you very bullish conditions. So this is a great look here in the EWW that Arvi just did, confirming that it has positive conditions that are about ready to turn up on the longer term for position traders. Or for investors. So that's a look at the momentum tracker, and Arvi, I think, did a very nice job on that in the trade ideas. This is trade planning with options. Katie's going to show you cycle analysis in gold, and then show you how to determine the strikes for an iron condor. She does a great job on this.
Hi, this is Katie with askSlim. This is Trade Planning with Options on February 8th, 2024. Today we're going to look at an options trade idea in gold futures. First, our legal disclaimer: the options trades that I demo and follow up on are trade ideas. When I talk about closing, adjusting, or managing them, I'm simply educating around management techniques, best practices, theories around risk management and profit taking, and highlighting aspects of options trading that we encounter as we follow these trade ideas. This disclaimer is specifically related to options trading. For full legal information, please go to the askSlim website or email matt@askslim.com. Let's get started. This is the weekly chart of gold futures, ticker symbol /GC. And on the bottom, you will see this blue dominant 45 bar cycle that is broken down into minor thirds. This dotted gray cycle is for silver futures. Now we are in the rising phase of the second minor third cycle. Momentum, as shown by the reversal scout, is still negative, quite flat, perhaps beginning to curl up a little bit. So that's an overview. Now we're going to switch over to the daily chart. Here you will see that we are coming out of the daily cycle timing window into the rising phase of this cycle. Our reversal scout has turned positive right here, and our slim ribbon has improved from negative to neutral. Now, this prior cycle retraced down to the 78.6% fib. That's this green line right here. When that happens, that means the probabilities favor not being able to take out the prior cycle high, which is why we have this projection right here to about the 78.6% fib, and then a higher possible projection up to the prior cycle peak. But in general, this is very range-bound price action, and for that reason, we are going to be looking at a neutral option strategy with a slight skew to the upside as a nod to the fact that we are in the rising phase of two cycles, both on the daily chart here and on the weekly chart. The tastytrade is our preferred options trading platform. From the askSlim homepage, please hover over the Marketing Partners tab and click on tastytrade. That will take you to a page where you can learn more about them. And if you decide to open an account with them through our link here, that will help you with a special bonus, and it will also help us. So please do check that out. So here is gold futures loaded into tastytrade. IV rank is 10.6. That's relatively low. However, it is difficult to do a neutral strategy with long premium. So we're going to look at short premium in this March 25th expiration cycle and see if we can collect enough. March 25th aligns with the end of our current daily cycle. I'm going to set up an iron condor, which is the sale of an out-of-the-money call spread and an out-of-the-money put spread. Now, where to place our short call? Our prior cycle peak is right around 2120. I'm going to give a little extra room, again, in consideration of the fact that we are in rising phases on both the weekly and daily time frames. So I'm going to sell the 2125 call. Now, as far as where to place our short put, we have a 50% fib level on the weekly chart right around 1990. So I'm going to sell that put. Oops, let's get rid of that. Sell the 1990 put right there. Now, if you have a large account size, you can stop right here. That would be a strangle. I'm going to buy further out of the money options on each side to define our risk and create an iron condor. You can make yours as wide as you like. I'm going to demonstrate a $10 wide spread. So I'll buy the 1980 put and the 2135 call. Now that nets us a credit of $3.10, $3.10, that's max profit. Max loss is $6.90, or the difference between the width of your spread and the credit collected. If we go up here, we can see our risk graph. We want gold futures to move around inside of this range. We have a slight upside skew with a little more room to the upside than the downside. That's our options trade idea today. I'll update the options trade idea tracker with this trade idea, and we'll follow up on it again next week.
I also want to follow up on Katie's great work here, looking at our momentum tracker, so we can get a good feel for how that whole group might be doing, and take a look at that little longer term look at the conditions of gold. Gold here, you can see GLD is what we're looking at here on the ETF. We're showing this as slightly bullish. And it says here also, conditions suggest intermediate correction is likely ending, and the dominant longer-term trend is likely to resume. So when you have slightly bullish, you don't have a lot of upside pressure. You have some. Market has been in correction. So Katie's analysis of the market holding in a range makes sense when you look at this in the gold market. Let's just take a look here at directional bias in the group, and you can see in here that a lot of these stocks are in bad shape. Newmont, very bearish. Pan American Silver, very bearish. The silver itself, very bearish. So these readings are bad, and they really need to begin to improve before we can get any real upside. You can see how these gold stocks are just really in bad shape. Right there. Is there anything positive in here? We're going to switch over, and you can see you have some slightly bullish in Goldfields, and of course there's the GLD, Wheaton Precious Metals. That one is slightly bullish also. And you can see intermediate, long-term, short-term, and our directional bias ratio has got 50% of these stocks as negative and only 13% is positive. So you have this yin-yang going on of the overall conditions in the gold and silver market, showing that they're in a correction, but maybe going to turn up soon. But they have work to do, and this whole group in here has some important work to do. If you want to just take a look at like a chart here on Newmont, and is this one is telling you that it's been negative? Absolutely. Here, all of these readings have been negative here, saying that there is not likely to get a lot of upside. So for longer term holders, this is really going to need to start to improve, and this is going to take a lot of work to be able to do that in a stock like Newmont. The overall conditions, as you could see, not looking very good. Let's just take a look here as we switch over to the short term and see if the short term conditions are what they look like, and they're even worse, as you can see looking at that. So short term, it looks really bad on here. Long term, you can see the ratio not much better there, and overall, this is just giving you a sense that it's going to be hard to get any real big moves right now in this metals markets. And I think Katie's got really that right approach, looking at the gold market, looking at an iron condor. So she did a great job in showing you where those strikes should be on the iron condor, and really impressed with that work. So great work on that.
As always, you can reach out to me on Discord or via email to katie@askSlim.com if you have questions or feedback.
Stock market analysis and projections on the S&P 500. But first, some important information. Please do read this slide. It tells you about our approach to the markets and how we suggest you use it, and the very important topic about you taking trade ownership. Do not miss this special. Level 1 month special, non-recurring, $10. Just $10. Non-recurring. If you want to stay, you'll be given that opportunity with another special, but take advantage of this if you've never been a member, or you're a free member at askSlim.com. This is a great way to get our full analysis on the stock market. You're going to get our daily stock index report. Yes, daily analysis on the S&P 500, NASDAQ, and Russell. You're going to get the insights from my work and Matt's work on our custom charts, cycle analysis, timing on multiple time frame charts with projections, key levels, momentum conditions, all of that. Our proprietary indicators shown to you. You're going to love that. Plus, a Slimulator momentum tracker, which I've shown you here earlier on in the show, and you're going to be just shocked at how valuable this is for investors and position traders. So if you're a day trader or a shorter term trader, you probably have investments in your IRAs and stuff like that, and that's what you're going to want to use this for, or for longer holdings. Over 1,000 symbols and groups with our built-in algorithms and directional bias and momentum, and you've seen the quality of this great application. So please do consider $10 for all of that. Holy cow. You're going to get our ETF weekly review, and that's on important market sectors, plus a ton of great resources with our worksheets, and you gain access to the Discord server for support from our whole team. Go to askSlim.com, top of the page, and click the Learn More button. There's all kinds of more information and examples on there. And you want to have any other things cleared up for you on that, write to Matt at askSlim.com. Remember, $10 non-recurring. It's one time, and then you're going to have to figure out if you want to stay or move up to another level or not. It'll be completely up to you. One charge, one time, $10. All right, stock market analysis, S&P 500. We're going to look at weekly analysis and monthly analysis. And remember that you can get the full analysis on all the indexes by signing up for $10 to our special right now, SIR Daily Level 1, our whole Level 1 information for $10. I'll show you more about that again in a couple minutes. So let's take a look here as we switch over to the stock market analysis. This is the weekly S&P 500. And you can see on here, in case you're brand new, on the bottom are those half circles or arcs. Those are cycle brackets. Those are just simply a drawing tool that just helps us visualize the energies in the market, the money flows. And in this case, you can see that when the bear market ended over here and the bull market began, that's pretty much where these energies shifted in here. This is our reversal scout, which then turned up here. You can see the minor cycles. There are two minor cycles in here. This one very strong, and this one over here very strong. You can see where there's just small dips, and the reversal scouts turning positive right there, telling us that this was an important bottom and that the conditions are still very strong. Now, earlier in the show, I showed an example of several of the high cap stocks that are very overbought based on their distance from the 34-week moving average. Here you could see the 34-week moving average right here, and I've extended it out right over here with that dashed line because there's a very high probability that when this market does have its correction, it's going to correct down to that level. That happens to be the monthly 23.6%. I'll show you that monthly chart in a minute because that's where I did our work on the S&P 500 at the end of the year with our projections. So let's take a look here as we look at this period right in here that we're looking at, these last several weeks, looking from the beginning of the year and then basically moving up for all of these weeks. In fact, this is historic because you can see there's only one down week that's in there out of the last 15. That is actually ties the strongest market that we have ever seen, but it has moved way away from this moving average over here. And we're getting into a period of risk that's coming up here. That means it's very likely to correct. That's when these two cycles, the second one of the second half and the dominant cycle come down. You can see that right in here, and that's what's coming here. Now, the later this comes right over here, the sharper the correction it's likely to be. You can see this one right over here was 1, 2, 3, 4, about 5 to 6 weeks on the downside right there, and that brought you from S&P 500 of about 4190 down over here to about under 3,800. So that was 300 and something points. That's what we're looking for right here. There's a sink in mid-March, the daily and weekly cycles, and that takes us down to, if it gets down to that monthly 23.6% or the top of that green line right over there, top of that green rectangle, which is the 50% move of this, that would take you down about 350 points or so on the downside. The best case that I can make in an extremely bullish market would be under 4,800 right there at the intermediate 23.6%. So once this stops, it's likely to pull down. This is just too optimistic of a decline of about 230 points to that 47.92. This is much more likely down to 46, just under 46.50 there, which would be about from the peak right now 365 points or so on the downside. Now, what are these important levels right over here? Well, I'll show you the monthly chart in a moment, but this is the monthly extensions, and this is where we thought that the market was going to rally up to between the 5,000 and 50 area, which is like right over here, sometime towards the end of the year. What I said in the beginning of the year was that the likelihood of it getting to 5,000 earlier in the year was small. Well, that proved to be the lower odds occurrence that did happen. These levels up here around 5,100 would be the outside of what I said we would get to towards the end of the year. So I think there's going to be a sharp correction in here, at least I would say 360 points down to that 4640 area or so. And then after that will be another upside move up out into the summertime. So we actually could get a summertime peak in this bull market. But I think correction first of some significance, a pretty good shakeout. And again, the daily, which I'm not showing you in here, has a trough due in mid-March. And this weekly trough right over here that you could see is around April 1st. So somewhere between mid-March and early April is really where I think this will decline down to. And this extension of the 34-week moving average is a good target for this to have on the downside. Of course, if it keeps going up and tests this levels over here at 5075 or 5100, then that would raise these numbers and raise the projections. I don't think that's really going to happen. I think we're going to stall very soon here in this area just above the 5,000 number and then get into this corrective period. So what I want to do is I want to look back at the monthly chart that I looked at earlier in the year, and I'm just going to move that in, and I'm going to make a comparison here that I think is an important comparison, and that is on the right you can see is the RSP. That is the equal weight S&P 500. And this over here is the S&P 500 on the monthly chart. So I'm going to blow this up first, and then we'll go back and compare. Now you see these lines right over here. That's what I had at the beginning of the year, expecting that it would continue up and then turn over, and that these highs would be made toward over here and towards the end of 2024. But we got up here into this resistance areas right there sooner than I would have, that I thought was the highest probability. Still, we have this correction over here that is due out into this coming springtime potentially, with a pretty good sized decline. So here, these are the supports that I moved over to the weekly chart, and this is really a period of pretty extreme risk in here. So you can see that this is the reversal scout right here, and that's still, when it turns up, it's still strong. This is likely to be able to still tell you that we're going to have a strong market and continue to moving up towards the end of the year. There's just this window of time in here over these next few months where there is likely going to be a sizable correction right there. Now, this is what I really want you to see, and that is the comparison between the S&P 500 and the RSP, which is the equal weight. So this is what it looks like here. Let's just get a closer look right here from that low right there to here, and this low right here to here. You could see that while the S&P 500 is getting up, and we thought it could get about 5% up from this peak right there, which it's doing right now. Look over here at the equal weight. This is because the high caps are pushing up the index very far. You still do not have a new bull market peak here in the equal weights, looking at the S&P 500, and this weights the by market cap. This one makes them all equal weighted, and you can see in line with what I was talking about, the breadth conditions that are in the market, that there is likely to be a correction that comes in here because the rest of the market just plainly is not doing as well, and very difficult to get any significant positive breadth in the market. So if there's a rotation that's going to occur, it's likely to occur when the market corrects during this period, and potentially you get a much sharper downside in the S&P 500, the SPX. Then you'll get here in the equal weights is there's likely to be some rotation, but still this corrective period that points out into April, May, right over here, this is likely to pull back and then of course move up again in towards the end of the year. So we're only looking for this correction into the spring, then a move up into the summer or late year before I think we get into the full-fledged bear market, which is out here into 25 and 26. that you see right there. So I wanted to revisit this and say that what we expected was that the market would test 5,000 50-50, but not early in the year. So this is stronger, but again, looking at the equal weight, you can see that the market overall is not as strong as the skewing that's going on because of the higher caps. And now getting into a dangerous period where a correction is likely to come and scare everybody out of the market. Again, here is that S&P 500 with our projections that sometime in the next few months we're going to see a best case move down into this area right over here, just under 4,800, with very likely moving down here to about 4,640, and I'm going to call that late March to early April as the time frame for that correction, coming down and testing that 34-week moving average that is moving up right over here, and that mid-March or later of 350 points or more to the downside. Earlier in the show, I said I thought there was a 1% potential upside and a 10% potential downside, and this is where I got that from. Looking at this and that period of risk that's coming up that is so absolutely consistent. Looking way back here, you can see each of those times that we were in a period of that yellow area where there was 2 cycles that were coming down. In other words, the money flow is correcting and coming out. Each of those brought a sizable downside move, and we're just getting to that right now. And that says if you're buying the market now, you're making a mistake, because the risk rewards just are not great. When I say you're making a mistake, I'm talking about what I think are the highest probabilities, because our analysis is probabilistic, and I hope you found that to be very valuable. One more chart I want to look at in here, just so you can get an idea that there are things in alignment with what I'm saying. This I showed to members, of course, also, and at the end of the year. This is a slight revision from that, looking at the VIX monthly patterns back to 1987. And you can see the absolutely astounding cyclical action in here that we see as the market is showing you that we are now moving into a time frame over here where it is likely that there is going to be an upward pop in implied volatility. So once you get to the bottoms right over here in implied volatilities, this is monthly, of course. Here you can see the crash of 87, 1994 debt crisis, long-term capital management, the 2000-2002 bear market here, 2008-9 bear market here, debt ceiling crisis, the Greek debt crisis, remember that one with the China flash crash, and the pandemic. Well, now you can see where we are coming to the bottom right over here, and a likely upturn in implied volatilities coming. Remember, uptick in implied volatilities means a demand for puts. That's how it's measured. People need to protect positions, or they're short puts because they got complacent about it, and then they have to start to cover. So you can see in here, as I come a little closer, we are now in this bottoming phase now for implied volatilities of a decline that is going on all the way through 2022, 2023, 2024 in this minor cycle right there. Now they're both about to turn up. You're going to see upside spikes and potentially events here in these next couple of years. So watch out for that. This is in alignment with what I'm telling you about as we look at the potential for this correction in the market and for an important stock market peak towards the summer or fall of this year. Right now, we'll just look for this correction that we've been talking about, and that is the analysis that I wanted to show you in the stock market. You can get the full analysis by becoming a level 1 member. This special, $10, non-recurring, gives you a look at our stock index report for a whole month on the S&P 500, NASDAQ, and the Russell. You're going to get our Slimulator momentum tracker that I showed earlier in the show. It's great for investors and position traders. You'll get our Spider Select review, plus many great resources for your trade planning and access to our team through the Discord channel. Go to the top of the page, of the main page at askSlim, click Learn More. Everything is laid out for you there, and you can sign up for $10 non-recurring, and you're just going to love what you see as you get analysis from us every single day. And Matt does a fantastic job on that. If you want to get acquainted, take that level 1 deal, subscribe to our channel on YouTube, click that notification bell, and you'll know when we put videos up. Like this video, give it a thumbs up, and watch our member videos in the playlists and past shows. On X, follow me at askSlim, and any questions, make sure you write Matt at askSlim.com. I want you to be so incredibly careful. It is so crazy out there, and I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been